Time to take a look at USD, Canadian dollars, guys. If I was starting to look at gold, and then I'm wondering what's the best currency to play gold in. With Rwanda, I could do the gold against USD, gold against CAD, gold against Australian dollar. And I was just checking out. Then I came, say, what about the Canadian dollar? And it's been consolidating sideways, 12-month moving average. Look at that nice base we had back here. Look at that breakout. And I want to see the Canadian dollar. How was it doing against the US? Wow, look at that nice multi-year base. Breakout. Secondary breakout off previous resistance. Monthly define resistance. Explode. Oh, I panic. No. Eesh, even that close below 12-month average, very scary. And you could have gotten back in on the consolidation move right here. Then off to the races, pull back to 12-month average, off to the races, got too far away. And then when people say, oh, Canadian dollar is going to be worth $2 US, buyers coming in, the wick. And after that, you've been sideways moving, going up, hogging that 12-month average, never getting real momentum on that down on that stage 4. On the weekly, swing traders daily could have actually taken a position probably. But on the monthly chart, to reduce noise, not the best plays you want. You want more like multi-year base, reduce the noise, and when they're huge patterns, but we're not waiting for those patterns. We're identifying them, and when we're close to them, they all cycle. Some are more mature, they're ready to break out, and then we want to pounce when we're right here. So if you just focus on 1 or 2 charts or 10 charts or 20 charts, eventually you might get impatient and you start, I gotta play, and then you'll sacrifice waiting for the perfect setup. But when you look at thousands of charts, you don't feel that, because they always come along a little pretty often, and then you get to you don't have to compromise and get in early here. You get in right there. And if you miss that, then you could get it on the pullback even better, get it back here on the way back up. I just want to see. Wow, let's back up. Wow. Oh man, USD, Canadian dollar was on a rip, man. 2000 came down to parity, unacceptable, back down to parity. So there are 2 phases. So at the bottom of 2008, 2007 was at the top of the stock market, and after that, right here, 2011, and then we're all the way back here. So there's a lot of up room right there. Let me add narrow. So let's see what type of targets I'm going to get. I'm going to look at the bullish target because we're closer to that. We're in an inclining 12-month moving average. So it closed above 136.67. Implied measure move. We have to overcome this previous resistance, monthly defined resistance. So that could be expected to be a bounce. And that target's bringing us right close to the wall, previous support and resistance. So I like that. Just expect here, if ever it goes, might bounce off here and then off to the races after that. Oh, and here's the greedier of targets. Added to the breakout line, and that's going to bring us more to the top. So I rather the first target. Why am I picking up 2? And here's the ultimate resistance right there. If we get back above that, do I have? Wow, it's never been that high. Or from 1972, maybe before. So those are the targets. We're not quite there yet. This kind of reminds me of the gold chart. Peak, not quite the same time frame. And then a sideways move, higher lows, testing that breakout line. All right, let's zoom in on the weekly and see if, where's my Forex, Stan Weinstein. See how that looks like. Closes below 30-moving average, going back up. Still a work in progress. Doing Stan Weinstein on Forex. But there's still the premise of the your clues. 30-moving average uptrend, above Ichimoku cloud uptrend. Same thing here. So right now, this is definitely an uptrend. We've identified monthly defined support. We really have to go through those, and then you get full steam ahead. All right. So what I'm gonna do right now, where can we enter right now? So we can't enter anywhere here. The best, again, is like we did on the monthly candle chart. Really wait till you go back above those monthly defined levels, closes above, and we'll have a nice base that we could explode out of. There is. I want to see the fast stock. Can I apply the fast stock on that trading pair? Higher lows. This is pretty neutral right now. Really in the decision mode. There's no divergence in either direction. Am I in some type of power zone? We just crossed the halfway mark. And when you go up above the halfway mark and you're able to stay up, that's an uptrend. That's the power of the fast stock. Not looking for divergence. You're just looking for, look at that long time in that negative territory right there. And can I get maybe a glue on the fast stock on the daily? The reservoir of energy building up. Oh, here you see some daily divergence. Less reliable than on the weekly. Gets consumed faster. Doesn't last as long. Where's my true call? Adios. So right there, being consumed, going in upwards territory. And on the daily, you have some important levels right here. So always look at the closes, whatever time frame you're on. Green candles, close, that's the highest you could go. Sellers coming in, that's your defined resistance. Support, same thing, but for closes of red candles. And you see here, it worked pretty fine. Base, higher lows, breakout, pulling back, testing it, trying to go out. But now you have some previous resistance being defined. And the more you churn through that, this could be a launching pattern that's going to bring us to the breakout level. Somebody on the daily could play right here on smaller time frames, less precise, more chance of getting whipsawed. But if the 12-month moving average is angling upwards, you could have a small swing trade right here and exit when you start hitting that resistance, and then wait for a bigger move. But until then, it looks pretty clear skies until we reach those 136 levels right about there. So doing Stan Weinstein on currency pairs, I'm still not sold on it. It's kind of hard. Just a zero-sum game. The correlations to the market or commodities, it just doesn't seem to be the same game. I'll still have to deep dive. But is there some type of manipulation with like stock buybacks that could skew the currency in another direction? Probably. But the charts really seem more sinusoidal, like up and down. Like I'll go back on the monthly. Then the stock market, it doesn't have to be, you see, we're not 1972 levels. went all this way up high, full retrace some 30 years ago, 35 years later. That's what I like about Forex. It's just pure charts, and they're not skewed. I'm really be curious to know what type of singles materialize more on Forex versus the stock market. Ascending triangles, some of those bullish breakout patterns, you probably get triggered more often than on Forex. Forex probably, I would assume if it's a perfect zero-sum game, that maybe it's a 50-50 bullish and bearish targets, getting the same type of exposure. So I guess I'm questioning myself to add more questions. More stuff to do. All right, but it's fun, so I'll keep doing it. All right, guys.